Well, let's move on then. The government has amended the domestic pricing model of natural gas in line with the recommendations of the Kirit Parikh committee. That's with regard to gas pricing. To discuss the impact of this new gas pricing regime, we are joined by Mr. Ashu Shinghal, the CMD at MGL, that's Mahanagar Gas Limited, who joins us. Hi, Ashu. Good morning. Thanks so much for joining in. Well, this long-awaited move has come about, and we've already got the notifications that you all have trimmed down on the pricing. That clearly would leave to more focus on the volumes. So what kind of volumes are you all factoring in for the coming year? That's for FY24 as well as FY25. And also in FY25, that Unison acquisition that you all did will be contributing. So how much do you expect it to contribute?
Good morning, everybody. Yeah, the Kirit Parikh committee has been a good move by the government of India and it's a big relief for the CGDs because the prices have been hovering around 8.5 and that would have gone up to more than $10 per MMBTU had this report was not implemented. Now, coming to the volumes which you asked, then already, as you know, we have passed on the benefit. Around 8 rupees reduction has happened to the CNG and 5 rupees per SCM in the PNG. And similar reductions have been done by other CGD companies varying from 5 rupees per kg to 8 rupees per kg. So MGL have been one of the highest of 8 rupees per kg of CNG. Besides 2.5 rupees per kg of CNG benefit we have passed from 1st February. Now coming to the volumes, there are two things to it. One that 21-22 and 22-23 we have already gone up by 15 to 17% from around 3.1 MMSCMD to 3.5 MMSCMD. So we expect, because of these positive changes, we expect another 5 to 7% growth on every year-on-year basis by several moves which we are taking. And Unison-wise, current the volumes are very low, but we expect that it will grow with time.
All right. So 5 to 7% volume growth you're saying for FY24 and then 5 to 7% growth for FY25 as well in terms of volumes.
That's very true, but it's subject to so many other things which are beyond our control, like the prices of diesel and petrol and so many other things.
Got it. All right. For the time being, it's working in your favor. What about the EBITDA per unit? I'm reading a Jefferies note, and they are saying that they're expecting it to move up as well to around 10.5 odd from around 9. What kind of a number should we work with for FY24 and FY25? Things can change and things are dynamic in nature. But for the time being, we have a volume outlook. What about EBITDA per unit?
See, the benefit of Kirit Parikh has been passed on straight away. I mean, whatever the $2 per MMBTU rates were reduced, we have passed on to the consumers. So EBITDA per unit should be remaining in the same numbers, and it may slightly get better off if the domestic prices or the LNG prices are reduced, because EBITDA is also dependent on PNG as well as the industrial and commercial customers, which we take LNG and supply it to the customers. So we expect that it will be in the same range. Maybe Jeffrey is right. Maybe 10 rupees per unit should be a comfortable thing.
Okay, 10 rupees per unit is what you're expecting. That's for FY24, is it?
Yes, both this year and the current next year.
Okay, 10 rupees per unit. That is higher than what you've done in the recent past, right? So there is a growth that you're expecting. Are you also looking at a volume growth for FY24? And if yes, what would it be, Mr. Shinghal?
Yeah, I just answered that.
5 to 7% for FY24. Got that. Okay. I want to also understand, since there is a volume growth of 5 to 7%, there's an EBITDA growth that you're looking at as well. Any expansion plans that you have in the near future? What is the cash on the books and how much of it would be used for expansion?
Currently, we have 1,500 to 1,600 CR in the balance sheet, and part of it will be used for Unison acquisition, which is expected to take place somewhere in October or November, post PNGRB clearance. Other things we are exploring. There are several initiatives which we are planning or exploring and trying to scout for new opportunities. And as and when they fructify, we will intimate to the market. But definitely we are running our strategy also and thinking about various areas where we can expand the business.
All right. So I also wanted, what is your current sourcing mix? I have a dated number that's for FY22. Well, APM gas accounted for around 86% odd. Currently, what is the mix? If you could give us the breakdown.
Yeah, you are right. Currently, also 85% is the APM mix. Balance is coming from mainly term LNG, which we have Henry Hub and we have other sources like Reliance we are taking, HPHT we are taking. So all the 15% is coming from a mix of almost Henry Hub is, we can say 5 to 6% is Henry Hub, balance is Reliance and Spot.
You said that you're exploring several initiatives with this 1,600 crores that you have on your books. Of course, part of it will be used for the Unison acquisition as well. But which are the other areas where you can expand the business, and anything that you're looking to do in terms of acquisitions in this calendar year itself?
I don't think acquisitions in terms of CGD will be feasible this calendar year, because acquisition takes a lot of time, and this acquisition has also fructified after 7 to 8 months of very deep due diligence. The other areas we are exploring is some small minor equity in electric vehicles value chain, or some manufacturing, or some CBG or ethanol, or so many other areas like long-term LNG haulage. So the slate is open, like whatever the company can do with the limited resources we have, and also it should have some synchronization with what we are already doing.
All right, we'll leave it there, Mr. Shinghal. Appreciate you joining in, and good speaking with you, as always, here on CNBC-TV18.